This was the biggest month of my trading career. In May, I made over $775,000 for the month. But honestly, the money wasn't even the biggest lesson. My biggest lesson was actually going through all my trades and realizing that I did mess some stuff up. I made a ton of mistakes and I could have actually had a better performance. And that's why journaling is so important, to be able to look at what you could have done better, what you could have done less of, and get all these lessons and build them into your trading strategy. Because to me, even a great month gives you a ton of lessons that you can learn. Same thing with a very bad month. So in this video, I want to cover the 7 most important lessons that I learned over the month, things that I learned about myself, things that I learned about my trading, the ways that you can improve as well in your trading, and some of the stuff that made the most importance and the biggest impact to get to that number. Now, without further ado, let's get straight into the lessons. Lesson number 1 is market conditions change everything. Now, most people are too caught up with the fact that they want to make money in every single condition that they don't actually find out where it is that their strategy works the best. Too many people are obsessed with beating the markets day in and day out and making money every single day that they forget that that's not the goal of trading. Trading is actually maximizing when your edge works the best. If you have an edge and you're not pressing whenever the market is rewarding you the most, you're not trading the right way. That's something that I started to realize deep into my career, that I have to press when the time is right. I can't just sit back. I can't just trade the same way that I was trading the month before, because there might not be the same opportunities the next month. I have to be able to take advantage of what is in front of me and make the most out of that. Now, with that being said, this month I took way bigger size on my trades. I had conviction in those trades. I took bigger size in those positions, and I was able to let my trades run for longer. Why was I doing this? Because I knew that the market was giving me an opportunity that it probably wasn't going to give me 3, 4, 6, maybe 12 months from now. So when you identify that your strategy is working well, of course you still want to remain humble. Of course you still want to follow your rules, but you do want to be able to press the gas. Knowing when to press the gas and when to take the foot off the gas is one of the most important things that I learned in my trading career, which has allowed me to take advantage of strong markets and also know when to chill out, relax when the market turns and doesn't give me the most favorable conditions. Don't be one of those people that fall into the trap of thinking that you need to make money in every single market condition. There's going to be conditions that are going to be more tough. It's okay to be red during those times. I know that I certainly am, and it's okay to make money in a bull market. It doesn't mean you only know how to trade a bull market. It means you actually are just maximizing the trades that are in front of you and the environment that is in front of you. And honestly, this type of environment makes me question why I even trade when the market isn't really moving, because I could make so much money during this period of time, and as long as I don't lose money whenever the market is chopping, I'm gonna eventually compound all these gains and make a crap ton of money at the end of the year. And you can see that within my TradeZella P&L. So obviously the month of April is when the market started to turn. I had a pretty good month in April here, but when I started to realize that the market was giving me a ton of amazing opportunities and things just continued to work very well for me, I got more aggressive, which led me to have a way bigger month in May. And you could see that within the TradeZella stats. Lesson number 2 is focusing on only the best setups. And the only way to truly really do this is look in your data and be objective with the trades and the setups that work best for you. What I like to do is categorize the setups that I trade, basically like a tight pennant, a flag, a flat top base, and then see which one objectively works the best for me. And then whenever we enter a stronger market, I want to be able to filter down to those setups that work the best for me. Now, personally, what I notice is these types of setups work the best for me, and I actually think these are the best setups in the market. This is called a pennant setup that usually sets up very nicely off of the key moving averages, the 8, 21, and 50 EMA. Specifically into the 21 EMA is absolutely perfect. You could see on this setup right here, ARM, which made up the most of my gains in May, was actually right off the 21 EMA, and I love trading these as breakouts whenever they expand out of their range. The reason why these work so well is because you have to think about how the market moves. It makes a big move up, and then it starts to compress within a base, and then make a massive move up. Compress in a base, massive move up. This is why I seek these type of setups, because they align for some of the biggest moves higher. So here on TradeZella, you could see my exact executions on this trade. I bought it right as it was getting through this big level of resistance, and you could see since then the stock has made an absolutely parabolic move higher, and just this one trade made me $143,000, and it's still open. This is only realized profits. So some of the unrealized profits I have total about $200,000, which made up pretty much 20 to 30% of the month's gains. And this is why it's so important to trade the right setup. Here's another example of another trade that I'm in that is probably going to be one of my biggest trades of June as this continues to run higher. And what you'll notice is the setup is exactly the same as the ARM setup. You have this kind of pennant flag setup right here. I bought it right as it was breaking out through these highs right here with a ton of volume, and you'll see the result is almost always the same. You get a massive breakout of the key level, and then an absolutely beautiful strong move higher like this. Another setup that I bought this month that was incredibly similar was on the ticker INOD. Unfortunately on this one, I did end up getting stopped out break even after the first trim, but just to show you the setup that I'm looking for, it is just such a clean pennant setup. And to me, these work the best. If I can find a setup that looks like this, it's probably going to make me a ton of money, especially in a market condition like this. So knowing what setups work best for you and seeking out those setups could be much better than trading a setup that doesn't work or works maybe 50% of the time, because you're basically, first of all, you're giving up opportunity costs when you're chasing these other setups. But second of all, you're not trading the setups that you know are making you a ton of money. So you don't need to trade everything. Some of my biggest gains came only from some of the highest conviction setups. Not forcing random trades, not trading every single move in the market, just patiently waiting for these pennant setups for volume to dry up, the moving averages to catch up, and then catching massive winners like this. One great setup is worth more than 20 average setups. And you'll also see this within my trade count. I only took about 42 trades on the month. This means that I took less than 2 trades per day. I was really focused and locked in on some of the best setups. Third lesson is volume tells the real story. Volume matters more than opinions. I stopped caring about predictions. I stopped caring about narratives. I stopped caring about news. And I focused on one thing. Where was money actually flowing, and what was price and volume telling me? And the issue that most traders had over the last few weeks is getting too caught up in some of the narratives. There was the war with Iran. There was narratives of oil prices going higher. There were so many different narratives that so many different traders were looking and talking about that they actually ended up missing a great rally that was right in front of them, because price and volume tell you the truth of what is actually happening. You don't want to get too caught up in the news and then get locked out of a move like this because of the fact that you were chasing the narratives, you were getting fear-mongered. You want to just focus on price. You want to focus on what's in front of you and trade everything that's in front of you. If I was too busy looking at news, if I was trying to analyze every single macro thing that was happening in the world out there and in the markets, what would have happened is I would have been scared to execute. I would have been scared to take the trades that made me $775,000 on the month. So always focus on price, always focus on volume, and always focus on what's in front of you, because if you get caught looking at other things that are not important as a trader, what's going to end up happening is you're going to get tunnel vision, and then you're going to miss the opportunities that are right in front of your face. This is a generational, once in a decade market. You will probably not see something like this in a long time, because we're living through one of the biggest technological booms there pretty much is since the 2000s. And whether you like it or not, that is just a fact, and you have to be able to trade what's in front of you. So you could think the markets are overvalued. You could think that the macro outside of where we are right now is bearish. You could think that the news is lining up for a move down, but is price doing exactly what you think that should be happening? If the answer is no, you have to trade what's in front of you. Lesson number 4 is risk management creates consistency. The goal is not to avoid losses. The goal is to keep losses under control. You're always going to lose a trade in trading. You're never going to be able to go 100%. Even as much as we think that we are always going to be right, the market at the end of the day is always right. And this is why risk management is so important. Even the best traders in the world, your Warren Buffetts, your traders that have been doing this for years and years and years and that make a ton of money, way more than me, are still not right every single time, because it's impossible. The market at the end of the day is random. We are speculators, but we are stacking probabilities, and we have to understand that we will be wrong, and it's okay to accept the fact that we will be wrong. We just have to accept it quick, move on to the next trade, and manage our risk. And the craziest thing is, even during my biggest months, I still had some red days. I wasn't green every single day. You could see this day I was red, and this day I even had a pretty big loss. And a lot of traders try to be right all the time, but the truth is, when you put risk in the market, you're not always going to be right all the time. If you try to chase being right all the time, you're going to end up taking way bigger losses than you need to. Now you can see my average win-loss per trade on the month was a 3.81, and that's exactly what you should try to aim for. You should try to aim for your winners being bigger than your losers. This basically means my average winner was $34,000, my average loser was about $9,000, and my profit factor was about a 9.2. What this means is that my losses were basically 4 times smaller than my winners. And what this allows me to do is not have a perfect win rate. I only have a 70% win rate for the month. I wasn't right every single day, every single time, but when I was right big, and when I was wrong pretty small. This is why a proper system and risk management is the most important part of your trading. Lesson number 5 is you don't have to be perfect, but you do have to learn from mistakes. Now, at the beginning of the video, I literally said I was wrong so many times and I made so many different mistakes that could have led me to have a bigger month. Now, the thing is, I could have let those mistakes drag me down and basically stop me from completing a very good month, or I could have went in there and I could have learned from those mistakes and made sure that I did not make the same mistake twice. And the truth is, you're not going to be perfect. No trader ever is. So for example, I took a very big trade earlier in the month on the 12th, where I took a pretty big loss, and I sized up on this position because I was very confident that these 2 stocks were going to go, CRML and UAMY, and I'm not hiding from the fact that I took a big loss on these. I took about a $30,000 loss on both of these trades, and where I'm more disappointed is the fact that these were pretty big losses in terms of percentage, about a 42% loss here, 49% loss here, which usually does not happen to me. Usually most of my losses are about 16, 20, 25% max when it comes to options. And I really did make a mistake here holding these a little bit too long. And the thing is, I could have gone and I could have revenge traded and I could have dug myself a deeper hole. But instead, I realized my mistake. I realized that I did something bad. And what I did and what I focused on was the next few weeks to make sure that every single loser is risk managed. And from there, I pretty much did not have another big losing trade the whole month. Now, that doesn't mean that I didn't have losers, but you could see my losers were $5,000, $11,000, which is pretty much in line with my risk management parameters. Now, another mistake that I made during the month that I ended up figuring out that absolutely costed me was I kept stopping out on trades and then not buying the same setups back. Now, stopping out on these trades was not the mistake because I followed my plan. And at the end of the day, you will get stopped out of trades that do end up going your way. But where a mistake could be is not buying the trade back whenever it starts to earn the right to get back. So for example, I ended up stopping myself out on this trade on this day right here. But when the stock ended up UNRing and getting back through this previous level of resistance that now turned into support right here, this should have been a re-add on this stock, or even when it's set up in this tight base, I could have bought it back through this level right here and then been in one of the strongest names in the market. But instead, I took this off my radar, I took it off my watch list, and this ended up becoming a monster move. Now, if you could see here on TradingView, this was my entry right here. I ended up getting stopped out on this day right here. I should have bought it back on this day, and I would have caught a massive 73% move on the stock that I ended up missing because I just took the stock off my radar and I didn't end up getting a re-entry. Or for example, another trade that I took where I ended up getting a really nice entry, I took a trim right at my first level and I ended up getting stopped out break even on this trade for only a net 4% gain, or a $1,200 gain. Now, this stock ended up being almost a 5 to 10x, meaning my initial investment of $27,000 could have been somewhere around $100,000, so it would have made about $70,000 on the trade, but I ended up getting stopped out break even, and I didn't look for a re-entry, even though the stock at the end of the day validated for one. And if you look here on TradingView, you can see this is the day that I ended up getting stopped out. I could have caught an absolutely massive 26% move higher, and this is probably going to continue to range and kind of go higher here And sadly, I'm stopped out of this trade because I didn't put it back on my radar. Now, I noticed that I was starting to do this in about week 4, and I was just not putting these stocks back on my radar, and I was kind of missing the stocks that I ended up getting stopped out on. And instead of buying them back, I was just taking them off my watch list. So what I did is I made sure that going into the next week, now if I would get stopped out on a trade, break even, or if I get stopped on a trade on a loss, I'm always going to watch for a re-entry as long as it constitutes for one. So with that being said, I bought this stock right here on this day as it was breaking out. I got first trim on it, and guess what? I ended up getting stopped out break even on this day. Now, instead of taking it off my watch list, I was actually able to buy this stock back into the 8 EMA and catch a pretty nice move today on this for a massive push higher. And if you look on TradingView, you can see exactly where I got stopped out on this day, and then I bought it back on this day right here when it tapped the 8 EMA, undercut the previous day's low, and gave me a re-entry. Why? Because I made sure I studied and learned from my mistakes. So obviously not every single trade that you get stopped out on is going to give you a re-entry, but you should still continue to watch, and you should build a system around re-entering some of these trades, because how many times have you gotten stopped out of a trade that ended up working later down the line, but you ended up missing the really big move because you forgot to put that stock on your watch list, or you forgot to get a re-entry? Probably a lot of times, and it's happened to me as well, and this is something that I've been working on fixing. And again, the point of this lesson is that you can make mistakes, but you have to be able to learn from them. Now, lesson number 6, and to me, this is the most important one and the one that made the biggest change for me in my trading, especially in the month of May. I really started to notice this, was holding my winners for longer. Too many people get into a winning stock but are not able to hold the trade for more than a 5, 10, 20% move when some of these stocks can move hundreds of percent. For example, on ARM, I ended up catching a 1,000% winner. I ended up catching a 300% winner on Oracle, a 300% winner on RDW. I ended up catching a 1,000% winner on MU because I was able to hold the trade for a long period of time instead of selling too early. Now, I want to show you my biggest trade of the month at $527,000 on the ticker MU. And this was the best trade pretty much of the month that I had. And it's because I was able to hold my winners for a long period of time and hold this trade for a long period of time that I was able to catch a net ROI of 638%. But I want to explain why I was able to hold it for so long and the exact exit strategy that I use. So my exit strategy boils down to trimming, not selling the whole position at one time, trimming and scaling out of the position as we go higher. And you could see exactly what I ended up trailing and how I ended up trailing and scaling out of this position as we went higher. So for example, my entry was right here on this massive base breakout that MU ended up having, and then it set up in a smaller flag right here that I ended up trading on a breakout. So perfect entry right there. Stop loss went to low of day. I took some profits into strength on this day and on this day as the stock gapped up. And my rule with options is usually take about 2 trims and then trail the moving averages. The reason why I do this is because of the fact that with options, you want to sell into strength because of the fact that the options are going to be juiced whenever a big move up happens. So I ended up trimming some into strength. But again, the thing is, I did not sell the full position. I sold a portion and bits and pieces. So I sold 5 here. I sold 5 here. And again, I started the position with about 35 contracts. And then I sold another 7 here. The reason why I took such a big trim up here is because the stock started to get extended from the moving averages. So when a stock gets extended and it's making a big move away from the moving averages, it's usually going to snap back into the moving averages. And what this does is basically sets you up for a mean reversal like this. So with options, I like to take a trim when the stock is extended from the moving averages like this. Now, again, you can see I did not sell the full position. At this point, I'm really only down. I sold 755. So about 17 out of 35 contracts. I'm down to 50% of my position, but I'm never selling my full position. Reason why is because this can happen. This stock ends up making a massive move higher and going way, way higher. And you can see if I would have sold my full position here at $181 per contract, I would have missed a move to $272 per contract, which is almost $100 per contract extra that I would have caught. If I, would have sold here, I wouldn't have caught if I would have actually not been able to hold all the way up until the spot right here. And then over here, I would have missed out on another $50 per contract. And right here, I would have missed out on another $100 per contract. So you could see as the stock goes higher and higher and higher, especially when you have options, the exponentiality of things start to become very clear. So I entered this trade at about $24 a contract. It ended up coming out to $420 a contract because I was able to hold this for a long period of time, hold my winners, use the moving averages, not sell too early. And this was the real big game changer, because months ago and even years ago, I probably would have sold this full position whenever it would have pulled back into the moving averages. I would have got scared, right? Because maybe 50% of my position was pretty much getting, crushed. I went from, being up 100% to only being up 50%. That would scare a lot of people. But the thing is, you have to use a proper exit strategy, because if you don't, it all leaves it down to emotions, and you want to be as emotionless as possible. Now, again, here's another trade that I took that I ended up holding for longer than usual because of the fact that I'm learning to hold longer and have the, cojones to be able to sit in these trades for a long period of time. So for this one, trimmed some into strength, trim some into extension here, trim another time into extension, trim into extension, still have the position open, but it basically went from $9 a contract to about $139 per contract because I'm holding this for a longer period of time. And especially if I have a shares position, I am barely trimming out of the position because of the fact that I want to let these winners run as long as I can. So if you can do one thing for yourself, make sure that you have a proper exit strategy, because there's a difference between a good trade and a trade that can retire you early. And that difference is being able to hold that stock and being able to hold that trade within your system. And number 7, and probably the second most important thing behind holding your winners for me, is stacking your probabilities. You're never going to be perfect. There's not ever going to be a trade that is going to be perfect. You can have literally everything you want and it could still fail, but give yourself the chance to trade things that are going to work more than others, meaning you're stacking your probabilities. So what I usually like to see is multiple things to make a trade make sense. For example, I like to see a theme. So a theme basically means the company and the stock and the group that the stock is in has a reason to go up, right? So for example, artificial intelligence stocks, right? Anything in that kind of group, in that theme, has a reason to go up. There's a reason for these stocks to go up. Another reason could be a investment from the government, like these quantum stocks like RGTI, which had a massive gap up because the government took a stake in this company. That's a catalyst, that's a theme, that's a reason for these stocks to go up. From there, I'm looking for the strongest technical setup. So a flag, a pennant, a wedge, something that tells me that the stock is ready to go higher. From there, what I'm doing is I'm looking to make sure that the stock I'm trading is the leader within the group, because there's a lot of stocks that might be strong, but they're not as strong as other stocks within that same group, and you're trading the lagging names. If you could trade the leading stocks, you can catch absolutely massive moves on those leading stocks, while the other stocks in the sector might lag a little bit. You always want to be in the leading stocks. And you can start combining these probabilities together. What that allows you to do is catch massive moves like ARM. For example, ARM is one of the best stocks in the sector. It has a massive weekly base. It's in the semiconductor sector, which is in the artificial intelligence theme and basket. It broke out of a massive weekly base and it had a really clean move into the 21 EMA. Very nice volume patterns, which indicates that there was accumulation here by institutions. And obviously this made a massive move higher. So when you could stack these probabilities, stack, you're giving yourself the chance to get into the best stocks, to get into the best trades. And even sometimes, again, some of these really good setups are going to fail. It's not always going to work, but at least you're giving yourself the chance to be in the right stocks. You're giving yourself the chance to stack those probabilities and be in the best names and give yourself the chance to catch the biggest movers. And that's going to be a recap for the 7 lessons that I learned from my biggest month ever. I'm super blessed and grateful to be able to do this for a living, to be able to see my hard work actually come into fruition. And if you're a trader, just understand this is years in the making, right? This didn't come overnight. I've been doing this for 8 years. It's not like I just jumped on one night and ended up making this much money. I took a lot of time. I was losing a lot when I first started, but I learned from my mistakes and used all the lessons that I talked about today to be able to get myself to where I am right now and build myself to the trader that I am today. The process is difficult, the process is hard, but the journey is worth it whenever you get to that end destination. I promise you that. I hope you guys enjoyed this video. I hope you got some value from it. Make sure to like and subscribe down below if you haven't yet, and I'll see you guys all in the next video.